beginning this segment of our program, I'm going to ask Randy Agron to step forward. Randy is the Vice President and Chief of Operations for A.F. Sterling Homes. He's going to speak to us this morning about the new home market. Randy has been with A.F. Sterling for 15 years, and that's how long he's been in the home building business. He's a CPA, and he's an MBA recipient from the U of A. Randy, would you step forward and share with us your thoughts on new homes?
Thank you. I appreciate you inviting me back here again. Wanted to start off by showing this slide here, which cut off a little bit, but that actually starts at 1945, and you can see goes up to 73. And I saw this, and what's interesting is that you can see, however many years ago that was, 70 years ago, 50 years ago, we were bouncing around 2,000 permits a year. And for the last 5 years, we've pretty much been the same levels, bouncing around 2,000 permits a year. So I started thinking about a lot of the indicators out there and how home building is in Tucson right now. And there's just a lot of things that you would think we would be really in a robust home building market. We've got extremely low interest rates still. We've got median prices that are still low, I think. I mean, the resales are still just getting back to 2004 levels. So affordability really should be there. The prices are up from 2011, 12, the bottom, but we've been pretty flat, I think, for about the last year. So we're not seeing, these unsustainable run-ups. We still have that good weather that we talked about. Every day, you look out the weather today, so people still do want to move here. I think also we're no longer in a deflationary environment. I think for a while there, 08, 09, 010, it was really hard to get people to go off the dime and buy a house. Why should we buy a house when prices are probably going to be lower next quarter? So the mindset out there is no longer there. I think people are starting to see the value of a home, and not just as an investment, but as a place to live. But we're still seeing right around 2,000 permits. So, why is this? Why are we still haven't seen this growth? A few of the things that I see is we've had very low population growth. I think we're still experiencing low population growth here relative to historically what we've seen. We still have very low job growth. Hopefully we'll see some big announcements here soon, and that can turn. I think since about a year ago, maybe even 2 years ago, we've really seen the investors go out of the market for the most part. They're still there some, but I think that really got us out of the rebound, those investors. And the investors are on the sidelines now, or they're looking elsewhere. One of the big interesting things too, and I saw it on the quarterly snapshot that you do, is the difference now between the median price of a resale home and a new home. The new homes, the median price is about $250. The median house of a resale is at $164. So for someone to buy a new home, they really do have to value a new home. I think, I'm not sure exactly historically that spread, but I do believe it's gotten a lot wider than it has been. From a builder perspective, our costs continue to rise. So you are seeing a limited number of homes in that, that 164 number. I was looking at a report on all the new communities, and of about 75 new home communities out there, I only counted 12 that even started below that 164 number. So again, the affordability on new homes is a challenge. The other thing we're seeing is we are seeing a relatively low supply of finished lots, which again, I think makes a lot of us builders hold on to our lots or not let them go like a lot of us had to, in the downturn to stay alive. So now I think the builders are a little more confident. We're holding on to our assets. We're not willing to, discount these prices just to get out of stuff. The other thing I think that's an impact is interest rates. Although rates are, like I said, historically low, we did see a bump in those rates, and it was about a year ago. And I think this is an interesting chart here, so you can see what happens if you can afford $1,000 a month You know, in that 011, 012 range, when rates went down to 3.5, you know, you could afford a $225,000 house. Now, you can only afford under 200. So I think we have seen some interest rate shock, even though rates are still, you know, well under 5%. It takes a little bit of time for people to adjust for that, and I think people are adjusting now. So I think we'll see some changes in that. I wanted to talk briefly about the lot supply. At the end of 2011, we had about just under 5,600 finished lots. End of 2012, we had about 4,200 finished lots. End of 2013, we had just under 4,000 finished lots. So if you think of that 4,000 lots, and if we're doing about 2,000 a year, we really only have a 2-year supply of lots. And as we know, it takes a while for us builders, you know, to go from a raw piece of land to a lot. You can't just, you know, call up the factory and order your lot. So it will be interesting to see what happens. Now, we are adding lots. I think we're going to add, I think, anywhere from 800 to 1,000 finished lots this year. But still, that's only half of what we're absorbing. So it'll be interesting to see what happens, I think, in the 15, 16 with the lot supply. We could have some issues there. And again, I think what will happen is that'll just keep the new home prices up. But I think all this low permit volume does say there could be some opportunity that historically, you know, the last 20 years, it's about 4,000 to 5,000 units is what we've done. So if we're only doing 2,000 right now, I think there really is some opportunity out there. And, you know, we're always looking for that opportunity for, you know, the right piece of property that we can do. But it is a challenge out there with the cost.